Okay, hi there, guys. Hope we're all doing well. Hope you can hear me loud and clear also. Just let me know. Give me a nod. Give me a thumbs up, and then we'll get stuck into it. All right. Hope we had a good weekend. Nice and relaxing. So make sure everyone can hear me loud and clear before I rip into it. Oh, loud and clear. Fantastic, mate. I got your email, by the way. I'll get back to that as soon as we get off. All right, guys. Welcome. It looks like we had a big weekend. US was down on Friday. They were probably preempting um, what happened in Syria. It looks like that was sort of obviously. I don't know what news comes over there if it's a bit different for us, but yeah, though obviously the market was a bit tense. It's just going from one thing to another. If it's not trade wars or things like that, it's a war, a potential World War III. So it looks like Trump just likes keeping busy. That's all. Um, he's a Twitter maniac, I think. But anyway, that's kept the markets. I think pretty much the Europe was actually not too bad. They sort of were edging high. And if you look at our SPY 200, just go and look at a chart on that, on a 30-minute chart, even at sort of, we closed up, not too bad, edged higher into the close, but right up into a resistance zone before we got knocked down. That was right at the start of the US session. Uh, so they were pretty much opened and then just sort of edged lower most of the session. Also in the background, it's not just trade wars, it was the, what do you call it, starting? Earnings season. I think, is it JP Morgan? JP Morgan came out a bit less than expectations. So it would, I mean, they were really good. I think they were good earnings anyway, better than previous, but they're not as good as the expectation or estimates. So that's could be a bit of a theme over there. With the tax cuts, everyone's sort of expecting some gun results, and if you miss those, could get punished. But we'll have to see how they go, and that could be looking like those higher premiums or those higher returns have been factored into the market over there. So there's still a bit of pressure on the downside overall. It looks like in the US. And if it's not earnings or global growth or anything like that, it's something else that's happening in the way of Syria, trade wars, all that sort of stuff, tariff wars. Um, so yeah, upside wise, it's still the markets are generally a bit stretched. We're getting on the Dow. We'll take a look at that in a minute. They're still hovering around those support zones. They've sort of just reacted off there, but we'll have to see how it goes. I think with regards to Syria, the biggest thing that's going to be watched or viewed now with that situation over there is how Russia may react. Apparently, I don't know if everyone's really, I guess people have been going through the news and everything. They took great care not to touch any Russian targets over there when they were bombing, when they were hitting it. So, it'd be hard for them to retaliate on the back of that. Otherwise, it looks like they're just starting a bit of a fight. But then again, I mean, who knows what news is real nowadays? What you see reading coming out, there's propaganda on both sides of over there with Russia and over in the US. So it'd be interesting to see. I mean, that does have the potential to escalate quite quickly. Don't forget, it's not just politics; it's egos as well. And I'd suggest that probably the two biggest egotistical blokes around. Um, what's the you got Trump and who's the Russian leader again? Whatever his name is, he's massive. So it'll be interesting to see how that plays out. But that I think is the biggest risk at the moment, and that could see quite a bit of volatility come back into the market if that escalates or if they react in a certain way that the market they can't or haven't factored in yet. Obviously, they factored in the strikes, a bit of a sell-off. Gold popped up a bit. The US dollar didn't do too much. It didn't go either way. I think it was a bit choppy. You look at the euro, it was a bit choppy. The US dollar compared to the yen. I think the yen popped up, and that's a bit of a safe haven. Not Stalin, Putin. There you go. Yeah. So um, where was I? Where was I? Gold popped up, yeah, but the US dollar didn't do too much. It was just getting choppy, and I think the yen's a safe haven buy, and that did pop up this morning, but they're not significant. I mean, it wasn't a significant rally in gold. It wasn't a significant drop in equities. So they're just sort of saying, I think equities is more based around just general overall, not fear in the market, but the overall corrective action that we're seeing, and well before this happened. So I think that's why you probably more saw a bit of a sell-off, and I think you probably get more pressure if nothing happens from this conflict doesn't escalate, doesn't get out of hand. I think you see more pressure from selling pressure from actual earnings not hitting the mark. It's going to be hard if they factored in quite a bit. It's going to be hard to beat estimates, and if that's probably the only way you're going to get these. I think the bank sector, they had JP Morgan. I don't know who else released results that didn't hit estimates, but the banking sector sold off. And it's got nothing to do with what's happening over in Syria. It's more just got to do with the earnings. Been maybe over factored in for the tax cuts, but we'll see. Let's get into it now. I'll get this down. I'll get my chart up, and I've got to change that, don't I? Transition. There we go. So we should have the right chart now. Done. Right, let's quickly just go over where we see the markets. S&P. That doesn't look too bad. If you look at the daily. The only thing is it's right extent. It's right into overbought territory. And last time it was up there, we're up towards 28. Now we're only 26.75. So it could get choppy around here, but you need to see buyers be, if it does pull back and have a good correction lower, even if it's just 70 points or so, 30 points or so, down to 26.25, you want to see that into overextended territory on the downside, oversold it, and buyers starting to step in it earlier at higher prices, just putting pressure back on the sellers. At the moment, the sellers are winning. You've got the highs up here, 28.75, double top essentially just across here, 27.75 or 80 zone up to 28. That was more of a washout of the previous high, and then we got that big sell-off, made that double bottom here. So that's a major double bottom, don't forget. We could just get choppy in here, and you get prices holding up above 25.50 on the S&P, probably make that a bit thicker through here, and you just get choppy, and then we start to build a bit of a move up. But again, there's still a bit of pressure on the downside, I'd suggest. Your Dow's probably going to look the same. Again, you get the double bottom, not so much a double top up here. We've got a lower high, which is still in play. Oh, that's interesting. I just want to see what, just want to draw that up. Just want to see what's happening there. So we've got a bit of heads up of a bit of a corrective action. But you can see it's right at that zone. So I mean, if this spikes up through here, so it gets up a few points, 24,800 or so, or a little bit higher from where we are now, that's just broken out of this downtrend. And then you're either you're going to expect choppy price action going sideways, more consolidation that's building that base for a longer term move up, or it's just going to go straight up from here. But either way, it hasn't broken yet in the Dow. That market is still holding lower highs. It's in a prime position to continue holding lower highs. You've got this sort of wedge price action. You've got this double bottom down here. And I'll put a lot of emphasis on double bottoms or double tops, especially if you've got a bit of a washout of previous levels, and you've got a little minor washout here when you get this big sell-off, push back up. We washed out that low to touch down on that 23,250, say, and then we worked our way back up, but we've only got as so far as getting potentially that little, and you can probably see it, this candle here, a minor double top, but that's not confirmed until you break up. So it's not looking the best, to be honest, on the Dow. Probably a bit worse than the S&P, the bigger, broader market. But it still has the potential to break down from here and then just hold up off that support, which is down here. There's two sort of minor supports, and just get contractive, a bit choppier until you get more of a point of agreement between buyers and sellers, and then we break out. We either break down or break up. But I think if we get this type of price action off somewhere around, say, 23,750 to 24, say it's around there, for example, and then we start popping back up and you get that little squeeze, then it's going to look better for a move higher. But again, it's going to take some time. FTSE, nothing's changed there. Doesn't look too bad. They didn't react. They were actually, I think, slightly higher Friday night. Same with the DAX. Nothing's really changed there. XJO, nothing's really changed there. We've potentially just got that confirmed high low at 58. We'll just have to see how that goes. We're getting stretched though. That's the thing. We're getting stretched. Could be a double top, and then we wash out 58 and we head lower and start attacking 57.25, or we just go into that choppy sort of a price action. The reason why I wouldn't think, I don't know what everyone else's thoughts are. The reason why I wouldn't think we're coming under too much pressure, I know the bears would disagree, is because we've cleaned out a lot. Don't forget, you've got major support down here. I'll say it's through that sort of zone through here. We pushed up. We got to here, this pullback, and that was your first signs of correction. We got smashed. That was that original. So that's sort of your first move down. Big correction up here, and this is more your secondary move down. So if we can just change the color. So you got one. Whoop, that's not what I wanted, was it? One move down here, and your secondary move down. So that's clean. That's probably about equal and opposite actually. 61.50 down to about. I wish I had it on the measuring tool. 57.75. If anyone can add that up quicker than me, 57.25. It's 400 points, isn't it? So a 400 point move, 400 points, say from 61 down to 57. It's about a 400 point move as well. Oh, no, I'm looking at the wrong one, aren't I? 61.50 down to about 58. So you get about 350 points. 61 down about 57.25, 57.50. You probably got about the same, haven't you? 350 points. So um, it just goes to show that move down there and that secondary move down there, it's washed out a lot of these late buyers that bought it. They might have bought it anywhere from here up to the highs. You bought it in here, you probably get cleaned out in that first move down. If not, you're probably being cleaned out in the second move down. If you built a lot of positions in there, it's hard to say. I mean, don't forget. Hey, Danny, how are you, mate? Don't forget that when you're looking at this, we're looking at the index, and we're sort of assuming that a lot of portfolios have probably closed out a bit or eased out. It doesn't mean that they're individual stocks. If you bought an individual stock in here, you could be up on that stock. You don't know. But in general terms, if you've got a portfolio of stocks, some are going to be down, some are going to be up. And I think with this move down, your general bias of your portfolio is probably down from those highs anyway. So it's just an assumption that a lot of people have been cleaned out here, and that's taken a fair bit of, not a lot of time. What have we got? The start of 2018 to about now, April. So it's about January, February, March, 3 and a bit months. So it's taken a bit of effort, a good move down. So it's done a lot of cleaning out of people. So I don't mind, and don't forget that weekly trend is still ticking higher. We probably have some room to move, and that's what I'm sort of expecting more. That's your push down here. We've reacted up. We've got this little minor higher low that we just spoke about here at 58. We've just popped up there. So that's a confirmed higher low, but it's not a strong one because it's not really a deep correction. I'll be more inclined to believe maybe we just wash out that level there and then have a bit of a pullback and then just clean out some of these buys. And it's still in context of this low. Yeah, it's still holding up, and then we just get a bit of a squeeze on, and then we potentially build that major higher low. Maybe somewhere 57.75, 57.50. But it was sort of coincide to the other markets. You've got the Dow and the S&P, what we just spoke about. But we'll see. See how that goes. That's the ASX anyway. So I just noticed after all the drawing, I've got lines everywhere. So sorry if that's a bit confusing. That's about it. So that's just going to check out. Actually, let's just see if the Dow has pressed lower today. I haven't looked at it, to be honest. Is anyone seeing whether the Dow's moved lower since it's opened today? What am I looking for? Where is it? Where is it? Oh, miles away, isn't I? There we go. So this is a 4-hourly chart. Let's go to a 30-minute chart. That's actually gapped up. So that was a close on Friday. It's gapped up high, and it's just easing off there. So it's, what was it, high around the open? So it opened, I think, at 11:30. So that was your first. That was your open. That red candle, boom, straight down. So it's not. We've retraced quite a bit of that move down on Friday, which is interesting. It's good. It's good to see. We'll take a look at gold while we're here. We probably had it just there. It's probably the best one. Go to gold futures. Gold's, it's pressed higher a bit. It's still that uncertainty. You're always going to get the safe haven. You're going to get safe haven buyers and gold bears. Sorry, gold bulls. gold bulls that will always happily jump into gold. That's all they ever trade. But if you go to the longer term charts, and that's just the 30-minute chart, so we may get, if the US opens tonight and heads high, or we just look at the Dow futures, it could just grind higher into the open and then have another sell-off. You don't know what's going to happen. But if they actually open and probably close higher on the session tonight, you might find gold's going to sell off. You're going to get those buyers that bought it up on Friday night and probably prior to that, just going to get squeezed out of the market because it's still showing signs of a choppy market than anything overall, everything, not just gold, but I mean the Dow and the S&P. Still a lot of chop in there. Yeah, no, true, Helen. I'll go to the longer term, the 4-hourly chart on gold. I'll go to the daily just to show you. It's this. What I don't mind on this as such, you've got a major. Oh, where's my little drawing tool gone? Oh, spewing. Here we go. I want to. I don't know why it doesn't stay there. I'm missing it. Sorry. Delete. I had a little icon here that would help me draw, and it's run away. Let's not worry about that then. All right, so we've got major resistance on gold up there. That's say your 1375 zone. You've got this little high-low holding through here also, and it's holding quite nicely. So you're getting this chop. You've got this longer-term trend. It's got this big sell-off here, built a low, reacted off there, all the way back up to sort of that, just fell short of that resistance zone in there. You had these corrections along the way, but you can see each one has been met with a good sell-off, but a higher level. This is the first time it's had a good move up, back up in the resistance zone, and it hasn't had a decent correction. It's been choppy, but it's been holding, retesting that zone around that 13.10 mark, being rejected there, 1, 2, 3 times now, and it's just holding that inside level as well, potentially at 13.23. So it's got the potential just to blast up and through, considering that there would have been a fair few shorts. That reaction that was near is just sort of vertical move up, vertical move down. This is the first time we've got some solid buying support in there. And that could take us just a spike up through that resistance zone, and then you have to just watch to see how it goes. But I don't mind that it's sort of that cup and handle type move, That's your cup there, your handle, whatever you want to call it, unless I just made that up. But it's just looking like it's got the room to spike up through. But we'll have to see. I mean, you've got your MAs on your side, your moving average, so your stochastics are in a good little zone here. They're not overbought, not oversold around the halfway mark, but it's still holding that higher level. So it's easily got the pressure. Buyers can just really pressure it up and spike it through that resistance. Oil was the other thing I want to have a look at quickly. That's interesting, Helen. China, Hong Kong, and DAX all down heavily on MT4. Let's just have a look at something. I just want to quickly look. Helen's mentioned it. Oh, that's your Hang Seng. That's the index at the moment. That's your Hang Seng. It's not down that much, really. Nikkei is actually up 0.5% on the index. So I just checked the data, what days they're starting from, Helen, what the open price is, or what the open time is, actually. It doesn't look like they're down much at all. Do they open? I don't know what the times are. Anyway. So let's just touch on crude then. We've been relatively bullish on crude. I think I sent out a chart a long time ago. It's more or less due to, why can't that just be good to me and stay there? Doesn't matter. I'm going to be mucking around, aren't I? I had a little, it's just there. Good on you, Braid. There we go. That's what I wanted. All right. So this is sort of that key level we're looking at. It drove up and it just spiked through, but then it started chopping around that level, and it was holding higher lows the whole time. So it was, to me, that's not a bad sign at all. I think we're getting a bit ahead of ourselves, potentially up here, getting a bit stretched. That's on your daily, but there's no reason why, especially what's happening. Um, if it does escalate, it's going to put pressure on crude prices to the upside on supply. Um, but we'll see how that goes. I mean, it's had a good run up the last few days. It's only probably today. Was it today's date? Or was that's today's date? It's just backing off from those highs. It is getting stretched on the daily too. So there's going to be a bit of profit taken. The markets, unlike stocks, they tend to go through, wash out the highs, especially if it's stretched into there. You can see that's come down from 61.87 to 66. That's a $5 rally without really any pullback. So it's stretched into that zone. You're probably going to get some profit taken. And here you'd be looking for another high low to build because the overall longer term trend is still up and it's broken through that key level around that 61.50 zone. So I still think crude could easily keep extending this move. It's going to have those slight pullbacks along the way. But I think longer term, there's a lot of room to move to where we got right up towards these highs, these previous highs. But I think that's going to be significant to get up there around that 111 mark, 112. Significant change in supply demand and all that sort of stuff. So, um, but it has got a lot of room to move. Even if it gets nowhere near there, and it's probably not really 50% just here. Look, it may or may not be. But even if it just gets around, a couple of bucks higher, $4 or $5 higher, that's still not too bad. You can take a bit of meat out of that trade on the shorter term time frames. So crude, still expecting that just to continue to grind higher. So we've got a couple of crudes. We've got BPT, I think is one we've got that's going great guns. We'll get onto that now. I've got a list of stocks the guys in the forum have been chatting about, giving me work to do. Okay. Is it actually down from the open on the, it's probably, yeah, gapping up the same as looks like it's gapped up the same as the Dow, has it? Hmm. Let me just get up. I don't think this is the out of it. This is not a CFD session, so yeah, it's not. It's just going to show the futures, and the futures are not out hours on the DAX, as far as I know. Yeah, the DAX ain't going to be out of hours, are they? 16th, or maybe they are. Yeah. Does anyone know the DAX have an out of hours on the futures? I didn't think so. I thought they had just your normal one session, one big long session to the US closes in the morning, but not at this time. So it was mainly just the CFDs that would be trading around now. Yeah, that's not looking too bad, the DAX. All right. Let's just get over to just what we've got at the moment. Beach, that's BPT. It's kicking along nicely. There's a few of us that have got this one here. We've taken a partial at 140, and that was more, coming into Friday, coming into the weekend, it was extended up into that 140 zone, and it really hadn't pulled back since the entry at 132, I think it was, on this green candle here. We entered here, and I don't like when things just keep dragging higher, and it's overextended. It's really overcooked. You would think anyway. And it may be a bit of some good news out. I think it's a good, didn't really read it, but some positive news out today. And it might be buy the rumor, sell the facts. So this might edge lower into the close. We'll just keep an eye on this. It may be purely because crude's going along nicely. But we'll see if it could easily extend the move. I mean, you can see they have some good sessions up, but this one, even this move up from down here up to this high, it had a couple of minor pullbacks. This move up hasn't from the 120 all the way from 120 up to towards the 150. It really hasn't pulled back, and it's starting to go vertical. You've got to question how much further it can go without getting some heat out of the market anyway. But happy to take some at 140 and just let the rest run. The fact that it's pushed up through today, pushed up through these highs, previous double top, you can see it's had this move up, back off, another move up, couldn't get there, and it's gapped down. So it's just had to clean out a few of these late buys to have another go at it, but it was kept holding higher lows. This is the the key. You know, you got that higher low and lower highs. It's the point of agreement. And when you get that breakout to the top side, you'd want to go long. Breakout to the downside, you'd probably want to keep away from it. But it's played out nicely, kicked on. But it's just a lack of pullbacks. You know, the higher it goes without a pullback, the more savage the pullback can be. So it's just something to keep in mind. Either way, you know, we're winning on that one. Nothing to complain about. SM1, that's it's holding up around that 9 level. Now we have taken, yeah, so we took some at 8.99 a partial, and we're back up there now. Just got to see how it goes up here. Whether or not we can blast through it and get extended, and then probably close out the last half. We are getting extended on the stochastics now, so the buying pressure could slowly just run out of steam, and you might get some profit taking entered in the market, and then we'll have to assess it from there. Whether we're going to build that higher low again. You know, this consolidation through here. You can see, you know, the end of October, start of November, right through to about mid-Feb, to the end of Feb this year. It's taken quite a lot of time. Held up around $6, washed out, then boom, up she goes. And we're holding higher lows since stuff. It doesn't get up through 9, even if it pops up through 9 to 9.25, say, has a pullback, I'll be more inclined to believe we're going to get that higher low again, another higher low, and continue that trend up, just to get a bit of heat out of that market, out of that move. If not, I mean, we could easily just keep grinding higher, but I just would be happy on this one just to start really tighten up the stops. We're at 810, just below this high low here. I'd be happy to, you know, if we get stopped out there, it's been a great trade, call it a day, look for something else. But you just want to give it that chance to keep on going. Hub is a short, which is, we've tightened it up. I did like, as a buyer, I wouldn't have liked this red candle here. That's rejection, and it closed down on the day, just washing out that previous sort of high there at 1050. We got to 1067. So I'm happy to move my stop down from that on the short, because I don't like giving shorts too much room to move, because they can easily, you know, you can get that wrong in a script, or you can get it right. They go straight down and spike straight back up again. So you miss being able to take some profits. You've got to be on the ball on shorts. And also, when you get it wrong, it can just grind you back out quite easily. It can spike higher. And don't forget, we could be part of that short squeeze where the market's building up some shorts and squeeze them out. So you just got to be wary of that also. There's nothing looking, for me, the key level was just above this level. And it's the fact that we've got that green candle. It's a red day today. Now I want to see that target down towards below 10. Take out these lows. If we take out that low, I think it's going to be on. And you can see the stochastics have gone from oversold with this low, retested the low. So that's probably dragged in a few buyers too, don't forget. Washed out this high, and then we've got a couple of red days. So it's looking more negative. So you've got stochastics, a good heavy buying, but didn't get too far. So if that's the case, that's a bit of buying added to the buying that have been bought up in here to get squeezed back out of the market. But we'll see. So that's our short on that. And the last one was a BPT we just spoke about before. So no BPT, Hub, SMG, RSG. RSG is the other one. And I don't think we've taken a partial on that one. No. No, we haven't on Resolute. But I might be looking at that soon. The fact that it just is struggling to hold above that 130 mark, you know, we keep popping up, rejecting, popping up, rejecting. It could be longer term. The longer term chart on this this weekly is still great. Again, you're just waiting. Are we going to get the pullback, and I'm going to get squeezed out of the pullback before we continue higher? And it is up in sort of that overbought territory with this move up. Had a little minor back off. We're back into overbought. So we might just keep an eye on that one just to see if we can potentially. We're not going to lose on it. I think we've got our stop now at 122.5, which is just above the entry of 121. So it's sort of a, you know, best case and worst case scenario break even trade, maybe a slight gain, but we're just going to look if we can give it a little bit more time to see, get up through 132, spike up through there. If it extends up through there, okay, we know it's on. There's some good buying pressure, and it's just going to, we expect it to continue on. If not, it keeps reacting off that sort of highs, I'll be inclined just to potentially lock in some gains and just let the second half go just to see what happens. Because don't forget, I mean, if gold does go like we expect, you'd expect this to continue on as well. So that's it for us. That's all we got. Any questions on just what we're talking about then? The babbling on. We've got a couple to look at now. See if we have any questions. All right, let's get into it. Oh, don't worry about Hub now. So we're just going to speak about IFN. There's not with IFN, and it was one that was just popped up on the chat. It has had a good couple of days up, good spike up. I mean, that's not a bad sign. Obviously, there's something potentially, or I don't know what's the news out today. New substantial holder. It doesn't mean too much. New substantial holder been bought it up. You know, had to chase their tail, chasing the price higher a bit just to get loaded. But that for me, that daily, that's just hasn't broken any trend on the way down. If I just get that up now, I did it again. I always do that, don't I? All right, let's get that. Let's get that. Let's get bigger chart. All right, so this, I've had this move down, this pop up. So for here, it would be my anchor. And it's hard to sort of say. I wouldn't call that, it's reacted up here. So probably that zone through there. Then you've got this reaction lower, pop up, reaction lower. It's given us a double bottom just through here. We've had this good spike up through here. So if that is an anchor, I'm not convinced that it is because it's not really this contractive action. Actually, it's not really. For me, your key levels are still right up here. It's probably clear on a weekly chart up towards that 80 zone. So we could just react higher. Probably some news. I don't know if some news is about to come out. Just looking at that chart, last couple of days is quite positive compared to what we've seen in the past. But there's been some buying up here. You've got the green candle here, gap up, and it got sold off again. The fact that this has come off the double bottom, don't forget a double. You're going to be people are going to see that double bottom and see this reaction potentially to buy in through here. Oh, look, it's the end of the sell-off, but you've got to put it in context of what's happening on the charts. That alone is not a good buy until you break that downtrend. And it doesn't look like to me we're broken downtrend on the daily. So going to the weekly, it hasn't either. I mean, you've got to take this. You can take it two ways, obviously. My way or the highway. Let's just draw that up. So looking at the bigger context, you got a double top up here. We've had a lot of heat come out of the market, big pullback, big correction up, and probably this is really the second leg down. So you got a major zone up at 105. We've got a little minor one we said before, 80 cents. So in context of that, we could just be correcting, clean out it, dragging a few more buys, and it could be another squeeze on. The fact that we've gone up so hard last week, I would expect that to get a bit choppy up here. The trend is still down. You can see that move down. It really hasn't abated. There's nothing to say for me at all that it's in a buy zone. It's just the last couple of days. So for me, I would rather see this market, even if you go back to the daily, it's gone up hard. I'd rather see this correction and then the high-low build. So the high-low builds and it takes not just 1 or 2 days, but a few days to do that, to build that high-low, and the fact go from overbought up at 80% down to 20%, say, it goes back down to oversold. So the sellers are starting to jumping back in, but buyers are stepping in at a higher level. It's just showing a different sign altogether, different price action, and then you might be willing to jump in and think that we've got a good area to start buying into. But I just think it's going to take a fair bit of time to build that out, for that to play out, because there's too many strong levels up here. And it might just be a correction on the daily. You get this little pop up, and then the weekly kicks in again. You get more selling, jumping back in then, and if I can just clear this up a bit, and that trend continues, it could just pop up to 80. I mean, it might coincide with a move up to 80. I mean, it's not too bad if we bought it, but I think longer term, I'd be waiting for a clearer signal to be able to break out of this contraction lower, that longer term contraction lower. So yeah, that's one. Well, I know, Helen, you're probably saying the same thing, weren't you, I guess? Perpetual, wouldn't go near it just yet. It's in oversold territory here, but well, that's your weekly. On the daily is just as bad. So the longer term weekly, there's nothing to buy it from. Daily is nothing to buy it from. You have to go back a bit. And on the monthly, look at the monthly. Look at these key things just on the monthly. I know that's a very long term, but every trade has got different time frames they're looking at. That longer term chart, doesn't look good to me. You've got this move up here, good pullback. The market's pulled back, probably essentially a double bottom there, and it's worked its way up. We had that little pullback, we popped up. But the thing is, this move up here, we broke. With this move down, we broke. Okay, we held up around that $40 mark. We popped up. We've essentially built a lower high or a double top, and then we've just come in with a lower high at 55, and then we've got this good sell-off. So we could be making a move down to say at 37.50, 38. Probably have to go back a couple of charts just to see down here. So this move could extend down to say 38, 39. So the weekly's not showing any reason to buy it, and that's off a lower high in the longer term time frames. All right, and that's, don't forget that monthly, it could just go consolidate between the highs up towards 60 and these lows around 40. So it can have a $20 range, consolidate through there, and you might find in a year or so it could be building a high low. So in essence, I wouldn't be buying it. Best case scenario, I would like to be going down to the daily around that 38 zone, see if it gets down there, see if we can build that high low potentially, and then treat it more like a range trade than anything else. That's what I'd be looking at on this one, and that move down is quite a bit of energy on the weekly. Look at that; it's near vertical drop, so that's not looking good. Get into the daily, that's some serious selling there. So that type of selling, don't forget, anyone's going to be mentally scarred too if you've got that and you've been long that for a while and you've got hammered. Say you bought it in here and you just got hammered with this move down. A lot of people probably got hammered. It's going to take some while to build up the confidence again, because there's so many stocks you can go to. If you got hammered in that one, you could just look at it and go, like, just out of sheer spite, I'm looking for something else. So that's why I'm thinking it could take a bit of time to get sober again, maybe. BNO was another one that people were talking about. I mean, that's looking good. I wouldn't buy it, but the chart looks great. I would have loved to have bought it in here. And I got a feeling we have bought that. Where did we buy it? Who remembers? It could have been one we got stopped out in. BNO on the 17th of August at 46, and we got out at 46 on the 19th. It was back here, wasn't it? So we had it around here, I think. So it was a bit too early, and we had this. So we had it in this little pop-up, looking great. Got stopped out at break even. The market eventually went lower, all the way back down to 35, and then completely missed it. So it was probably a tough one to trade though, because you can see longer term. Go to the weekly. The weekly looks good. We've had a pop up here, built a higher low, extended up. I think we caught it in this zone before this pullback. So the weekly chart would have been the good one to be looking at. It's come back down. Didn't quite get there. What are those lows? Low at 31.5, got down to around 34.5 before we started building. And maybe, it's coming out from oversold on the downside. So that was a definite high low on the weekly charts. You probably wouldn't have expected this type of reaction. It could have been news based. Would have been a tough one because you've got this good pop up, a deep correction. So for me, if I was going to buy that, it would have had to been through the highs at 44.5 and put your risk below 39. Probably a wide risk if you're looking at it that way. I don't know what percentage terms that would be, but probably percentage terms quite good, quite wide. I would have liked a bit of contraction, inside high low to work that would have worked out fine. You would have got this run up to 60, pullback, maybe taken something off just in here, and then you got this secondary move up. So it's going strong. It's just you've got so many levels too that it's just pushing up into. So it's just got through this high at around 58, say 60. Just got through the high probably today, I think it was it? No, it washed it out on Friday, and it's just traded above there today. So you got a resistance just broken here. Then not much further up, you've got a good little resistance zone through, say at that high there, 65, say, and it's just traded up there today. So for me, I would rather see some heat come out of this move up. I mean, that's been quite vertical too, don't forget. From overbought to oversold on a weekly basis, that's that move up. Not much heat's come out of there. I would just rather see it consolidate, build a higher low, take a bit of time to do that as well, and then get ready to pop and see if we can get that for a bigger move up and through 65 and so on. That's probably about it. We had Flight Center at one stage, didn't we? Helen put up a chart on Flight Center in Discord, and I completely agree with what you're saying, if I remember. That looks like could be the makings of, I mean, just looking at this weekly, I think what Helen was mentioning, correct me if I'm wrong, and if you think I'm wrong, you're wrong. That's not what I wanted, did I? That's what I wanted. Screen snap, do that again. So this is another thing to just look at on Flight Center. So that move up, that's your longer term trend higher. You can see this is the leg we were looking at. So you've got that leg up, that pullback. It tried to go. It's got your lower high. It come back, but it's only so far as to retest the same low through 43. It retested there. We could be doing the same thing here. Don't forget this market's had a good little run up. I'll take that back. It's had a good run up here, had a pullback. It looks like it's potentially building a lower high again, this scenario. So it could chop around. We might find that the support's going to start holding around 53. And that's a couple of reasons. We were overbought through here before we got that secondary correction. You can just see you're matching it up. So a bit of heat had to come out of that market. But what it's done is held support and built in, dragged in some more buyers. And it's sort of a reversion. This is more reversion to the mean. If we can show that just through here, that's reversion to the mean kind of trading as the MAs catch up to price rather than the price pull right back to the MAs. It sort of was touching on your MAs. MAs were still pointing high. The 50, I used the 50 and the 20. They were still pointing up, and then it's accelerated off those MAs. Come back to touch it here. Good strong kick up. That on the weekly by itself doesn't look too bad. It's just the action on the daily that I would be looking at. If I just make that a bit better, you can see it's had that pop up, pull back. That's a good pullback. What we got from our weeklies in here, good pullback, popped up. It's retested the highs, and it's potentially looking like it's rolling over from here. Just the last few days action, it looks like it's struggling to get back up through the highs. If that was a strong market, you would have expected that to blast through, 59.50 up through 60, continue on with the trend up. Instead, we're finding a bit of selling up towards this 60 zone, 59 to 60 or 58 to 60. Within that couple of buck range, we're finding a bit of selling in there, and the sellers are starting to step in a bit lower. You can see through here, probably just that high there and that high. It's reacted off there. Got a lower high in here. Until this breaks, this level down at 52.72, it could just go sideways, consolidate, and like resetting itself. So the market could easily reset itself, hold support. Buyers are watching it, who hasn't entered it, watching it, ready to get back in, and bang, they're in, chasing it back up again. But you want it to come off that higher low. All right. What's next? All right. So we looked at PPT, Helen AMP. Let's have a quick look. It's a bit the same, isn't it? Rubbish. So that's not good. That I don't like this kind of, that selling from that high down to that low. I don't like that. If it's come up under resistance and then boom, you can see it as quite this move up from that support, from that low there, 44.75, that move up. So it's up a bit, a pullback day, up a bit, red day, red and green candles so interdispersed as it's grinded its way up. That wasn't so good. You get up to the highs and then bang, straight off the highs. So there's some selling coming in there at the highs there. It's not looking so great. So I wouldn't just buy it because potentially there could be support down there. For me, it has to prove itself. That's on your weekly. So look at that daily move there. It's just tried to react off there, this green candle, off so that support, what was that low? 475. It's washed out 475. Tried to react back up, and today and Friday been red again. So being oversold or overbought, there's no reason to buy or sell. It's got to be in conjunction to, the fact that this isn't oversold territory. It could be a bit of a heads up that this move down is running out of steam. You might get this sort of controlled, staggered move higher with minor higher highs, minor higher lows, and then bang, you get this severe sell-off like we just saw there again, and blast through 475 on the downside. So you don't want to get caught in that sort of action if that happens. You want to be confirmed. And again, that kind of move down, I think it's going to take some time to build the confidence back up. And you want to probably see more of this type of action. A good little push up, good reaction up, and then that reaction to build the higher low, and then look for your entry. So AMP, I'm not keen on that. It was for a while there for some reason. I can't remember when. Said that a couple of charts. I think the longer term wasn't looking too bad. but just after the last few weeks, it's not looking really good. What else do we have? SHV, Select Harvest. Geez, it would have been nice to catch that. Can't remember if we sent out a chart on this one. Probably didn't, did I? SHV. Is it 14th of the 3rd? I think we said that. We got this in the last one. So that was on the 14th of last month. Was it somewhere around here? 14th of March. Doesn't look right, does it? That's the weekly chart. Oh, so I think it was just up here. Does it pop up? Pull back. Green. It was just in here. So I was on this move up. No, well. So yeah, that was looking good, and you can see it's mainly the weekly that looks good. You can see this this move up goes near vertical. So just to explain why I actually think this is quite good longer term too. You've had this good move up near vertical, big sell off. That was, I don't know why, it just got smashed through there. Some buying started to try to come in, but then this grind lower, that's just squeezed out of this buy, these buyers that have bought it back, the start of 2016 towards mid 2016. They've been squeezed out, but you can see the angle of this move down. So that's the opposite. I don't mind. I actually like seeing that type of price action. At least, if it's on the, if you see this sort of controlled, got to find where my drawing tool is. There we go. This controlled action on the way up, I don't like that as much, and I tend to believe, especially after a move down, this controlled, I'm expecting a secondary move down. But the same on the upside. We've just got a big move down. That was this move up, and then we've got this controlled move down. So for me, it looks like this is not continuing. And then you start to look for, okay, if that's the case, I'm going to be looking for some buying opportunities. Come all the way back down, retested support, and then we started lifting, holding higher lows, and that's not a bad sign. If you got in nice and early through here, so say 450 to 60, that would have been quite nice. But yeah, I think this potentially has got some good. It could just start accelerating. You want to see this type of thing start accelerating up. You start getting some bigger days, and the pullbacks are very minor. If you can see that, the first obviously pulled a calls up towards $8. You might get some reaction off there, but we're only got six. It's a couple of bucks away. In dollars, say $1.50 to $2, potentially drag out of that. If you can minimise your risk, obviously below that. But again, I wouldn't buy it in here. It would have been nice to buy it, who have bought it on Thursday, on this green day. Through that high at 564. If you had to buy at 565, your risk is just below 540, say 530. Small risk to go to $8 would have been a cracker. What was the other one? SPNV. Lauren, you got me working hard today, mate. Oh, that looks good, mate. Polynova, what do they do? So just touching on this one, the daily looks good. You can see that kind of curving move. You can see buyers are stepping in at higher levels. The biggest problem I've got with this one, and you probably just saw it, we flick it over to the weekly. There's a few things. You've got these divergence. I mean, I don't look at it that much, but I always take notice if I see it. You've got divergence when you've got this push up here. On the stochastics, got this, essentially, you overbought it over 80% and didn't reach 80% again, this move up. And that's with this little pop up. So that could be just two moves up, then bang, we capitulate. So that daily looks good. It's just, and you can see, I draw it up too. There's a few factors just to keep an eye on. If this is a good, what do I do that for? If this is a good looking chart, or if it's a strong market, sorry, I would have expected that candle right there. That candle right there to continue. and not pop up and get rejected. So what it's done, it's broken out. It's basically potentially to me looking like a bit of a clean out of that zone there. It's spiked up, probably brought in a lot of buy stops, and then it's ended red on the day. So it's opened up, stopped them all in, buys stopped into the market potentially, and then it's turned around and squeezed them back out in the day, or it's ended lower on the day than where it opened. So that's not a good sign when you get that sort of reaction. If you're expecting some buying to continue on through, you would expect more a candle like that. Sorry, a green candle like that, maybe a green candle like that, or sorry, that green candle as well. You want something a bit stronger, especially with a clear cut resistance zone that's just been broken. And that probably goes into, we'll get to the weekly chart. I mean, it could easily pull back here, like pull back and start to build from there and then accelerate. You don't know, but just the weekly chart's the one that may find a bit of pressure. And that's probably because, and you could look at the action before, look at it through here. This move up, it got choppy through here. It was holding high lows. We extended into new highs only by a few cents, and we had this big pullback all the way back down to 17 before we accelerated higher. So it could be a bit of that price action, choppy, reversion to the mean, start to go, then sellers come and smash it back down again. It could be that, or we could just get smashed back down from here. But the fact is we've had a good strong leg up from just below 20 cents all the way to nearly 60 cents. So it's about a 40 cent rally. It's appreciated there on the weekly. So this chop up here, and especially after that daily candle, we could get a deeper correction. And if it can't go higher, what's going to happen? Anyone that's bought it through here, you'd expect to take some profit and book some profit. Take something off the table at least, maybe half, because it seems to be struggling. So you don't want to be the last one to enter a profit target to take some off and chase it down. You want to be a bit more preemptive to that and just look at the signs, what you're seeing. Does that make sense there, Laura? All right, so we've got a few to get through now. You're going to keep me busy, guys, aren't you? TWE. Yeah, look, I've been looking at this one for a long time. Just never got into it, stupidly enough. I mean, it's just had such a controlled rally. You can see it's come from way back down in 2015, mid 2015, just been appreciated, but it never got out of hand. Every time it had a good little spike up, it would consolidate more sideways than pullback, but it would always hold key levels. Pullback, reversion to the mean type of thing. Clean out a few of the late buys and starting to build again, building again, pullback, build. We could just be getting the same scenario. We could just be chopping around for a while before we start edging higher again and continue that trend high, but it's not vertical by any means. So when you get that vertical move, don't forget you're probably going to get a good pullback, but you would expect a harder pullback. The way it's been controlled here, this little profit taking, it's not much at all. That's on your weekly chart. So that could just chop around through here. It's got to hold above, for me, it's got to hold above that 1675 mark. And if we can build a higher low, it's worth a go just to see if we can kick up. So I've just got a call coming through. So it's worth, if it holds an inside high low here, and by inside, what we mean is in here. So if we've had this little push up here, that's up, and we've just had this little, you want to see this type of thing. If we're going to hold that inside level, inside higher low, take a buy through there. It buys on a break of that little minor, it's essentially a lower high. You got a break, you know where your risk is going to be. You've boxed that trade up a bit, and then you're preempting a break up through that high, which would be up towards 18 bucks. So, all right, so I don't mind getting those little entries, and if it doesn't get up through there, you just cut it quick, because that could get, if it gets up here from that inside level and it could just come straight back down, or it could just range trade, and you're sitting there waiting for a while, or it could be putting pressure on the downside. You don't know what's going to happen. But I'd rather be out and reassessing it than, if this plays out and it just reacts off 18 and comes straight back down again. I'd rather be out and reassessing it than holding, thinking it's just going to range trade. It's going to continue the longer term weekly. Because don't forget, everything that goes up is going to come down and have a good correction, both on the daily and the weekly charts. What was the other one? We look at Paul's next, CYB. Y. I can't spell, can I? Yeah, it's interesting. This is just probably a little example of what we just spoke about in inside level. If you look at the weekly, so we just go and mark this up. Quite clearly, you've got a high through here about 590. So what's happened? The market's opened at a pullback, pushed up, got that level, all the way back down again. So that's just your, your initial traders, everyone getting cleaned out of the market, taking profits, come back down, buys a step back in. Maybe someone who bought it on the open or had it on the flow, got out up here, and re-entered back in here. But then since then, it's holding quite nicely. Push up, pull back, higher low here, pull back, higher low, retest the highs there essentially. Then you've got this pull back. It's still holding quite nicely. This is the most recent controlled, nice move up here, right up into the previous highs back in, I don't know, May 2016. But from here, we've had a good correction lower. It's had a good pop up, and this is a higher low. So that's just what we spoke about. So that's your inside, a good example of an inside break on this candle here. You can see it just popped up through here. That's your inside high low, off an inside high low here. You got your break. So for me, I would expect continuation at least up to 590, potentially through it. And I expect potentially through it because of this type of price action. All right. So this is the weekly, don't forget. So it might get a bit choppy before then. But so I'm just going to go through that move. That move there, that's sort of what we got at the moment. It could just get a bit choppy. It might get down. As long as it holds this type of trend up, then it could start to accelerate. The amount of time it spends to not going down and holding a minor higher low, then that would lead you to believe we're going to get a break to the upside, especially after this longer term weekly price. This price direction, I'll put a lot of emphasis on, especially when it breaks. So you've got the inside higher low here compared to this one, and that's the move down. So you've got this big move up. Clean out traders. If that was weak, you'd expect it to go down here, maybe all the way back down to 490. Instead, buyers stepped up to the plate a bit earlier at around 530 and started pushing it back up again. So that's not a bad little move. It's just, it could get a bit choppy from here. So I wouldn't buy it here because there is the risk that it could easily come down because your risk would have to be around that 520. I would rather buy it. I mean, most people know after we've been talking for a while, buy it on a rising market rather than buying it when it's pulling back into a level. But the weekly chart's the one I don't mind at all. If you can get choppy in here and then start to rise again, it could be worth a little entry. APN, we'll look at that too. Let's look at the wheel. All right, then China drought. That's the one so far, drought. Cool, Mister. So look at APN. Then it's probably going to finish the day there. Squeeze one more in. just just reiterate yourself there, Helen. Yeah, AMP's a bit of a dog. SHV. All right, let's look at what's this one here? HT&E. What do they do? You're an entertainment and technology company with assets in Australia, New Zealand, Hong Kong. Publishing. All right. One thing I just do, obviously, just looking at this here, it's looking quite. The daily's not too bad. It's probably something we spoke about before. Um, it's got ahead of itself. One of the first ones, IFN or PPT, something like that. With this, just the last few days, you can see it's gapped up here. I'd expect a bit of heat to come out of this and start to pull back, but then I'd be looking for that higher low. And don't forget, it's gone from sort of mildly oversold, close to oversold, to close to overbought with this move up, and it's taken out a key level at $2. So I'll be inclined to believe it's going to have a bit of a correction, build another high low, and then I'll be looking for an entry from there. But the weekly, I mean, just looking at that, the weekly's down, and the weekly trend has not broken yet. So it's just something you've got to be careful of. I mean, it's probably different with shares than it is with, and I've got to get that out of my head personally. I know when shares contract, it becomes more of a value proposition, I guess, when the market's sort of going undervalued and it's going to get back to fair value. They never get to fair value. It's sort of over fair value or below fair value. So if this is below fair value, you might expect some buying to step in around 150. Because shares can only go to zero, and if there's nothing wrong with it, they're still doing, plugging away, doing well. They'll eventually start to pick up again. That's why it's easy just to hold longer term. If you can just buy a stock, you're paid for it. You just hold it. If it doesn't go your way to start with, you might have to hold it for a few months. You can hold it for a year. And if they're still fundamentally sound, that's great. It'll eventually have another run up. But obviously, I don't like trading like that. I'd rather be in and out. If it's going down, I'd rather put my money to use somewhere else. I don't like holding stocks just because they're fundamentally good. I'd rather be buying them, give up a bit, and buying them on the rise and try to lock in chunks of trading. I think that's where you're going to get your best results. But either way, just look at it at HT1. You can have this big move down, try to go back up, so lower high around 4, and we've had this big move down here. Technically, it's just you're going from oversold to overbought on the weekly, and we really you would have expected us to potentially be up towards these highs, somewhere around 275, if it was a strong market. But instead, it's starting to probably come into a bit of selling, and the same with the daily. You had a good pop up here. We've taken out this level, but you do that time and time again. With this move up here, you took out this level back, way back here. And then we tried to go again, and we've had another big sell-off, from up 270 down to $1.60. Nothing to say we can't do that with respect to the weekly. So what I would like to see, a lot more work put in on the weekly chart, because it could just be a bit of this type of action, which is okay if you bought it somewhere around the lows at 150, 60, and you're running it up, and you may be locking a bit of gains up here. The code on that one is HT1, HT&E Limited. Just up here, I don't know if you can see that, HT1. So yeah, it's just that weekly I don't like so much. I'd rather sit around and just wait. I'd rather see the MAs come in and contract and start, and then get the daily set up for going long, especially if it's oversold on the weekly. You come to oversold zone, but it's a higher low than the previous low on the weekly, and then okay, buyers, longer term buyers are starting to step in at higher levels, and just looking for a daily entry, especially if you've broken a couple of levels. But at the moment, we really haven't broken anything. This market's still grinding lows. Nothing to say it can't keep going. You never know what's happening behind the scenes. All right, but we'll see how it goes. Well, that's probably call it a day there, guys. Thank you very much for joining me. I hope any questions, if I get off too quick and you don't get a chance to ask, just send us an email. And I've got to get you back to you there, Paul, as well. So yeah, thanks for joining me, guys. We're back in on Thursday at the same time at 12:30, and we'll go from there. Enjoy the next couple of days. We'll see if there's going to be some volatility come back into the markets tonight, and maybe for us tomorrow. But not too bad. The fact that we're up 15 points, we're up nearly 30 at one stage, weren't we? So we'll just have to see how that keeps going. All right. No, guys. So I was just daydreaming then, just looking at something. All right. Thanks for the. We'll talk again on Thursday. Cheers, guys. Bye.